Snapchat has lost 85% of its value over the past year, and now they're doing a completely ground up restructuring for the company. Is it worth investing in right now? Well, let's find out together. Hello, folks. This is Anthony Grasso providing you financial news that you can use. What I'm going to do is I'm going to examine this company and I'm going to look at the fundamentals and see what they're doing. And then I'm going to give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing and hit that notification bell if you like your daily stock reviews and recommendations from an unbiased source. So let's just hop in right into it. All right, so Snapchat, they're laying off about 20% of their more than 6,400 employees and canceling its original shows, its in-app games, and several other projects as part of a corporate overall restructuring of the company. Now, the CEO of the company wrote that Snap is restructuring their business to increase focus on 3 strategic priorities. So for this company, they say community growth, revenue growth, and augmented realities are the 3 key things. And also their earnings. Their earnings have just freaking plummeted over the past year, and it's forecast to go even worse. So that means that they need to stop the hemorrhaging of expenses. Now, and Snap recently, they reported a disappointing second quarter's earnings, and it said it would not provide guidance for its current quarter. That's not good news. We don't even provide guidance for their third quarter. But let's look at some of the fundamentals of this company, right? So, I mean, the company's trading at $10.93 a share. As you can see here, just over the past couple, since the beginning of the year, it was up at like $85 like last year, but it's definitely come down and come down and come down. Now, when I look at the fair price of this company, it has negative earnings. So you look at the price to sales ratio. The price to sales ratio is 3.6 times. Well, that's still high compared to the industry average is 1.7 times. So it's still overvalued when you look at fundamentals. But now when you look at the share price to its future cash flows using the discounted cash flow model, it's trading below my estimated value of about $14.41 a share. So a little under $15 a share for the fair value. Now, it is important to note that revenue growth is projected to increase around 17% per year. That's definitely good, but its earnings are in the cropper. They are boom, tank, bad. Right? And it's currently unprofitable, and this company is not forecasted to be profitable over the next 3 years. Now, while it's unprofitable, I want to know how much cash they have on hand so they won't dilute the shares anymore going into the future. They have enough cash runway for 3 years to maintain its current positive free cash flow level, which is good, I think, because they're restructuring, reducing headcount, reducing expenses, focus on the things that work for your company. Yes, I know it's a restructure, and they have to do it. Now, it is extremely important to note that insiders have only sold. They've flown the coop. They Snapchatted out of there. Insider trading has been like crazy amount of people selling their shares off. And shareholders have been diluted, I don't know, 4 or 5% over the past year. So am I a buy, hold, or sell recommendation on this company? Well, let's examine this company for a few minutes. Let me bring it back over here. All right, so first I want to say, the second quarter they reported, it was a disappointing quarter 2022. Now, there is significant uncertainty surrounding the advertising demand for the platform. And by the way, the firm did not give any guidance around that. And that kind of concerns me a little bit here. Now, when we look at Snap's addressable market, while the digital and ad budgets continue to grow, so does the number of ad inventory providers in the space. And there is no guarantee that a larger portion of the new digital ad dollars will flow to Snap. I believe the larger companies here, which are Facebook and Google, by the way, and YouTube, they have a proven value of their ad inventories to advertisers over the years. And by the way, those 3 dominate the market right now. Now, however, I do like Snap's innovative features, by the way, with the data privacy and some brand safety concerns surrounding like the Facebook issues could help attract a larger portion of advertisers' budgets. Now, management of this company is still bullish on their stock. Of course, they're going to be bullish. They expect to continue double-digit user growth in the third quarter of this year. So that's definitely a good thing. But however, giving slower growth in general, we see greater focus on managing expenses and maximizing profitability. And that's exactly what they're doing. No matter how hard it is for them to do it, That's what they're doing. Now, I see the new solution supporting ad partners and believe Snap is positioned to benefit from increasing user engagement efforts in augmented reality. Now, I have recently reduced my growth expectations for Snap significantly, resulting in a new fair value estimate of around, $14.40 a share. Now, in my view, Snap has continued to disappoint on the revenue side. Continued growth in user and engagement time improvements on the platform are positioned the firm well and attract advertisers after it addresses the difficulties faced by its ad measurement tools. Now, returning the firm to a stronger double-digit growth rate, maybe in a year or two. So based on all of that, I am a very cautious buy recommendation on Snapchat with a 12-month price target of $15 a share. Now hear me out. Okay, I do believe that there are lingering effects of the Apple's iOS ad tracking changes. Now, with a weakening macroeconomic environment right now and the Apple's 2021 iOS update, in that update, what it did was it made it more difficult for social media companies to track users on behalf of third-party advertisers. So you got the ad spend and the ad inventories, and there's a clash going on right now. Now, there might be a significant reduction in a customer engagement right now and higher than expected costs that could push out Snap's ability to widen margins and generate significant free cash flow. But you know what? You're gambling on this one. This is a higher risky bet for the long term because nothing is set in stone for these revenue and growth projections. Now, there's other risk factors to look at. There's Instagram, that's owned by Facebook, may emerge as a substitute for Snapchat, which would just devastate the company. But what are your thoughts? Leave your comments down below. And so there you have it, folks. And as always, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Slam that notification bell down if you like to hear daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.